A big deal over the last few weeks, the president meeting with bankers, large bankers a couple of weeks ago, small bankers this week, talking about making more loans, talking about how they're going to handle regulation, talking about modifying those loans to keep people in their homes. Joining us right now, Matt Englert. He is a partner of Kaufman, Englert & Lynn. That's a law firm down in Orlando, Florida. And Matt, let me ask you about this situation. Are we being successful in keeping people in their homes until we can weather this storm? Is this mortgage remodification plan working?
Well, it looked like it may work. When this was this was rolled out back in May of this year, and we've had a lot of clients that got into the program, and as part of the program they have to do a 3-month trial period, and we have hundreds of clients coming out of that trial period, and the banks are supposed to make that modification permanent. Unfortunately, we have a lot of clients just sitting in this state of affairs right now and kind of in limbo, and the bank not telling us whether or not they're going to make it permanent, the modification. So we have a lot of people in the system, but very few of those people have actually had their mortgage modified permanently.
But is it because, Matt, that they can't, the modification hasn't worked on their end, they're still not paying their bills, or is it on the fault of the bank?
Oh, no. It's all on the bank. What happens is you have to qualify. They lay out a criteria, so the borrower has to meet that criteria. If they meet that criteria, they can get into the program, and then they have to do what's called a 3-month trial period. So they have to make 3 payments. As long as they do that, the bank is supposed to make that modification permanent. So all the clients that we've had come out of this have done everything successfully, but the banks are just sitting and waiting and not giving us an answer.
Well, so let me make sure I have this correct. So they make smaller payments, a payment that they can make if they qualify based on their current income situation. They're moving along the 3 months, and then at the end of the 3 months, it reverts back to the old payment, is what you're telling me? They've shown they can pay that?
No.
All right, help me out on that.
No, it's okay. That should be their permanent payment from that point forward. The whole goal of HAMP is to drop the payment to 31% of your gross income. So they make that payment for 3 months. At the end of the 3 months, that's supposed to be their permanent mortgage payment.
Yeah.
But what's happening is the banks are just sitting on them. They're not making them permanent. And we just don't know what they're going to do from this point forward. We're kind of in limbo.
We haven't seen much success with these loan modifications, though. Many that are in foreclosure go get a loan modification. They're in foreclosure right after the loan modification begins. I mean, is that part of the hesitation on the bank's part? They don't want to even get involved with this to begin with?
No, that's not entirely accurate. When they came out with those figures, that was at the beginning of 2009 and at the end of 2008. And what they considered at that time a modification is what we call a forbearance agreement. And typically with forbearance agreements, borrowers cannot successfully complete them because they still cannot afford the payment. Now that we have the HAMP program, now that the mortgage payment is 31% of their income, now these people can actually afford to make the payment, and their success rate is much higher. But the banks still aren't making these modifications permanent, and that is a big problem that we see right now, and we're not quite sure how we're going to handle it. We're in the process of doing some due diligence on a possible class action to group these people together and file an action against the banks to force them to do it. I have reviewed, and my firm has reviewed, the agreements between the major lenders and the government, and if they've agreed to participate and the borrower qualifies for the HAMP program and the borrower successfully completes the 3-month trial period, the lender really doesn't have a choice. They have to make that modification permanent. For whatever reason, they think they have a choice.
Well, I guess that's my next question, Matt. As you do your due diligence, what are you finding in terms of answers from these, whether they're large banks or the smaller community banks, in terms of why they're not making these loans permanent moving forward?
We haven't gotten any answers out of them. They won't give us any answers. So I haven't, there are a lot of theories out there as to, a lot of speculation as to why they're not making them permanent. But we do not know for sure why they're not doing it. But we do know, we ourselves personally, my firm has hundreds, if not thousands, of these clients in this specific situation. And nationally, there are probably hundreds of thousands of people in this situation. So to be quite honest, we haven't figured out why they're not making them permanent.
Matt, are particular banks bigger culprits? Are you seeing a trend out of certain banks?
The one bank that I see a lot of the abuse at, well, all the banks are doing it. All the banks are really keeping borrowers in a state of limbo, but one bank that's particularly bad is NationStar. They are doing everything they can to not do a modification, even if the borrower qualifies for HAMP and has successfully completed their 3 trial payments.
Matt, we appreciate the 411 on this. Thanks, ma'am.
Hey, thanks for having me.